All right, not a good day for Amazon today, and their stock was down 11%, down $44 a share, which is huge, right? And if you want to look at the price earning ratio, and I looked at this the day before, and I asked the question, where's the price earning ratio going to be for Amazon, and rank it against Google, Bitcoins, and then another stock. Guess what? PE was 1300 right now. Stock down 44. They missed on earnings big time. And the market was down as well. And what I said in December of last year was that, hey, guess what? There's a lot of euphoria going on. These are some red flags. And I just feel that, you know what? The market is on a slow but steadily decline. And it could potentially be a bubble. And that's what I basically stated. And we have seen earnings, and I also did videos on earnings, and it's my opinion that we would potentially see an earnings bloodbath, and we have to a certain degree. But I could go into a few other parts of the market and show you why I also felt that the stock market would go down. And also some traders told me that they felt that the stock market would go down. And let's see what their reasoning on why the stock market would go down right now. Over here is just the open, close, and volume of the Dow Jones Industrial Average for the month of January. And there's also one date dated December 31st. And I don't know if you guys listened to that interview that I did with Andrew Abraham. He is a trader. He's on YouTube. He's a trend following mentor. And what he told me was something that I didn't even think about. He stated that whenever you see the market go down, not a significant amount, but I looked at it, at least minus 0.20%, and you see a volume spike, right? That means that's a distribution day. And if you see a cluster of these distribution days, that's negative for the market. And if you want to look at this, right, just look at it starting from December 31st. You see the market go down more than 0.2%, volume goes up. You see that once again on the 6th, right? Compare that from the 3rd. So that's 2 distribution days. If you want to look at another distribution day, it was on the 8th of January. And also press Control and plus at the same time to zoom in if you can't see. If you want to look at another distribution day, look at the 13th of January. So that's 4. If you want to look at another one, it's on the 9th, right? Right, not the 9th, the 23rd of January. If you want to look at another one on the 24th, so that's 6 distribution days. If you want to look at another one, look at the 29th and then the 30th. So I'm counting 8 distribution days within a span of close to 20 some trading days, right? 21 trading days. And you usually look over a span of 25 days, right? That doesn't mean if you see a cluster of these that the market's going to necessarily go down. But history shows, according to what Andrew Abraham was saying, that if you see a cluster of these distribution days, then guess what? That's a red flag. And when you see the volume go up, right? That means most likely there's more institutional selling going on, especially when you see the market going down. So that is something really interesting to note. I never looked at it from that angle. All the traders that I follow or talk to always look at volume, right? I mean, they really don't look into conspiracy theories. I know that a lot of us follow these conspiracy theories, but at the end of the day, what they care about is volume, right? So that's some metric that I'm going to look at going forward. So when you see a cluster of these distribution days, red flag. And I don't know if the emerging market problems don't get solved quickly, and if earnings continue to disappoint, especially with all this margin debt in the system, guess what? I wouldn't be surprised if this market continues to go down. And this was one of the articles, or one of the topics I got into in one of my videos about earnings. It says that Best Buy shares are getting obliterated. This was on January 16th. And what my thesis was earlier in the month, or it must have been late December, I said that, hey, guess what? There's going to be an earnings bloodbath, in my opinion. And we're starting to slowly but steadily see that right now. I mean, you look at stocks like Best Buy, Sears didn't do so well. If you want to look at today, Amazon didn't do so well. JCPenney, I don't think, has been doing well. And now you have to also look at some other retailers as well. There's Bed Bath & Beyond, but then also in the news is Target, right? They had a security hack breach, right? Big problem. So when you start to see that, and you start to see also headlines, I saw a headline today on Business Insider that malls will continue to face a decline, or they're going to continue to face problems unless they're like a high-end retailer. Those are still going to thrive, but the small size stores, not the mom and pop stores, but some of these retailers that all of us go to, well, they're going to have problems. Malls are going to have problems. And don't also look at this one thing though. Look at Obamacare, right? That's going to take a lot of our income away in order to pay off these health insurance companies. So if you look at all of these problems going forward, and potentially higher oil prices, right? If you look at all of these factors going into this earnings season, or continuing into this earnings season, and going into the next earnings season, next quarter, just seems, in my opinion, that the market is going to roll over. And another important part, let's just look at the margin debt once again, which I've showed you many, right? Just look at the margin debt in the red here, and look at it correspond to the blue, the S&P, right? So we've always seen all this margin debt, and it's going into propping up the stock market. And also what props up the stock market is central bank liquidity from the Federal Reserve and the Bank of Japan, which creates this yen carry trade, right? This yen carry trade basically takes money from low interest rate currencies, or which is the Japanese yen, into higher interest rate currencies like the US dollar, right? And that money is going into the stock market. So if you see companies beat earnings, then guess what? Their stock price is going to definitely go up, or most likely go up. But if they miss on earnings, right, with all this margin debt, I mean, that could spell some trouble. And don't get me wrong, there's some other problems as well. You have a lot of these firms buying back stock. So when you have companies buy back stock, which I mentioned several times, right, that takes away the amount of shares outstanding. So it's all well and good if they beat on earnings. If they don't beat on earnings, well, you see the stock go to the downside in a powerful way. And that's what we've seen with many of these retailers, and also stocks like Amazon right now. So that is something to note, guys. And I'm going to ask you guys a question. What do you see happening with the Dow right now? I mean, the way that I see the chart, not the charts, but the distribution days, right? What's going on in the emerging economies with Turkey, with, I think it's South Africa, and then a few other countries are having trouble. And there could be a potential problem with China, right? You have all these headwinds going on in emerging economies. You had this euphoria going on before. It just seems that the market's going to go lower, maybe not in a straight line, but a choppy pattern to the downside. That's what I see happening. And the taper, right? I do think that there's going to be a reversal of the taper, but we could talk about that in another video. Once again, guys, what do you guys think? I still feel that we still have room to the downside right now in a short-term trading pattern. Once again, I cannot guarantee any profit or loss. These are just my own thoughts, and I always tell you guys to do your own homework or go to your financial advisor, and they could advise you with the plan. Alright guys, talk to you later. Bye.